Wall Street just lit up again. And it's all because of AI. Amazon's $38 billion partnership with OpenAI is sending shockwaves across Silicon Valley and the stock market. Chip makers are rallying, investors are pouring back into tech, and the question is this the next leg of the AI bull run? Let's start with the big one. Reuters reports that Amazon and OpenAI have struck a multi-year $38 billion agreement that will make AWS the primary cloud provider for ChatGPT's expanding AI workloads. This is huge. Until now, OpenAI had relied primarily on Microsoft's Azure cloud. But with ChatGPT usage growing at a record pace, OpenAI needs additional computing capacity. And AWS brings exactly that. For Amazon, it's more than just hosting. It positions AWS as an equal player in the AI infrastructure race, directly competing with Microsoft Azure and Google Cloud for the future of generative AI. The market reaction? Amazon stock surged more than 5% intraday, adding tens of billions of dollars in market cap. Analysts are already calling it a strategic masterstroke that locks in years of revenue while deepening Amazon's ties to AI's most powerful brand. And it's not just cloud giants. Onsemi, ON, reported stronger than expected third-quarter results, driven by demand for its energy-efficient chips used in AI hardware, electric vehicles, and industrial automation. Revenue climbed above Wall Street estimates, and margins remained healthy despite the sector's price pressures. Executives highlighted that AI-enabled sensors and power semiconductors are becoming critical components in next-generation vehicles and smart manufacturing. Investors took notice. Onsemi shares climbed after hours, signaling that the AI hardware cycle is far from over. In short, if NVIDIA is the brain of the AI revolution, Onsemi might just be the nervous system, quietly powering everything around it. Add it all up, Amazon's cloud expansion, Onsemi's earnings beat, and you get one clear market signal: AI optimism is back. The Dow, S&P 500, and NASDAQ all opened higher this Monday as investors looked past political noise and focused on what's actually growing: corporate profits fueled by AI. Analysts from JP Morgan and Goldman Sachs note that AI-related spending is becoming a real earnings driver rather than a speculative theme. That shift is critical. It means the AI trade is evolving from hype to fundamentals. So, what does all this mean for investors? It's clear that AI isn't just a headline anymore. It's reshaping balance sheets. Amazon's $38 billion deal shows how infrastructure is the new battleground, while Onsemi proves hardware demand remains strong. But here's the real takeaway. When AI optimism lifts the entire market, it's not just about which company wins. It's about how the entire ecosystem evolves. In my next video, I'll break down which AI-related stocks still trade below fair value and how to spot the next breakout before Wall Street catches on. You'll find the link right below. I'll see you there.